Yes, guys. So, welcome back to the YouTube platform. Thank you guys for joining. Today, I want to kind of rock through the best way and the simplest way to understand liquidity, because I feel like there's a lot of explanations in the space on what liquidity is and what it actually does for the market. And I feel like there's an easier way to kind of understand for those that are trying to grasp and get their head around these concepts. Okay, so I'm going to be giving you just a simple demonstration on how you can actually implement this in your trading. I use it every day. It's a very powerful confirmation, because it's people getting liquidated, right? The market doesn't move without capturing liquidity first, so it's very important that we understand that. So instead of kind of just dressing it up and using these fancy terms, I'm going to kind of give you the full breakdown of what it actually is on the chart. Okay, so when it comes to liquidity, hopefully when you guys are doing your analysis, okay, you're doing it on bigger time frames, because liquidity on bigger time frames holds more weight, due to daily levels and the higher time frame levels actually being a bit more sensitive when these areas are breached. Okay, so I'm going to do a simple demonstration for you guys in regards to liquidity. Okay, so when you're kind of getting into the retail space, a lot of people can kind of get indoctrinated into support and resistance levels. And with support and resistance levels, there's nothing wrong with using them, but you have to understand what is resting above and below those levels. Okay, and that is what liquidity is. Liquidity is just another term for money in the market. Okay, liquidity is another term for money in the market. So when you think about those levels, right, where there's potential selling pressure happening, right, we know that if people are selling in this area and the market's moving down, we know that there's liquidity resting at the top of this area. Okay, so we need to be very aware of that and mark those areas for future reference, because we have to understand that we don't have the tools that the institutions and the stuff have. So we have to kind of think about it on a deeper level as to where would be the obvious areas where there's stop losses resting and stop orders resting in the market. And that is what all liquidity represents. It's literally stop losses and stop orders, which are pending orders, right? Whether it's a buy stop or a sell stop, that's all liquidity represents. So when we understand this and we draw these areas out, we can see that the market, when it's pushing up from this area, people are going to be buying. So the buying pressure starts coming in. We have to start figuring out where the stop losses are in the market. Okay, now what you'll find is when the market actually moves up and down, right, normally you see that there's actually liquidity that has been captured. And that's a very important thing, a metric to kind of understand as well, is that when we see other areas of liquidity pending in the market or resting in the market, it's important to have them drawn, but it's also important to know when those areas are captured. Okay, so where people would have been buying in this area, we know that there would have been stop losses and pending orders resting below this liquidity level, right? So as and when that area is taken out, think about the people that would have been liquidated that were buying here, and think about the sell stops that would have been triggered in, as some people that trade support and resistance, they trade break and retest. And this would be an area, a support area for some, and if that support level was broken, they would simply say, okay, the support level has been invalidated. They're looking for a retest of it to then continue lower and such, right? But that's not what is happening in the market, right? It's really dependent on trend, but it's also dependent on understanding that with the break and retest method, it's really not as simple as that, because otherwise, as you can see here, when we do retest that level, right, you get a slight push down, but eventually it actually goes the opposite way. So what you have to understand is, right, people that are kind of indoctrinated into looking at it from that lens, you can't really blame them, but you have to understand that it's a flawed logic that people have kind of picked up via information online, and it's not the best way to look at the markets, truthfully speaking. So when you look at it from a perspective of, okay, areas are being liquidated, that's one of your reasons to potentially look for a reversal to start forming, right? It's not always going to be a reversal. I'm not saying every time a liquidity level is taken out, but when we start to see the market move up and down, right, you can see that liquidity is captured before the market actually starts moving in each direction. Now there's a simple thing you can also do, right, and especially on the daily time frame, right? I always say this to people that are doing my mentoring and such, and they always have light bulb moments when seeing this, is that when you take a line on the daily chart and you start to see daily lows captures, as we can see right here. Notice, right, we don't get the volume enter the market until that daily low is captured. Now, why would it want to pierce below this low? Because of the liquidity resting in this area. Now, obviously, this is a range. On a smaller time frame, you can see it's going up, it's going down. This is going to be a range on a smaller time frame. But notice, right, it's targeting the obvious areas of where the liquidity is resting. Okay, so there would have been liquidity below here, and there's the liquidity above that would have been resting in the range. So it's targeted the low of the range to begin with. And notice, until it targets the low of the range, you don't get the volume start entering the market. So you can do this for most daily highs and lows, right? When you see the market actually move the opposite way, it targets liquidity first. Okay, and it's not just upwards, you can do it downwards as well. Okay, we had some highs here, targeted highs, and then we start moving down. Before we move down on this engulfing candle here, it targeted the previous daily high, and that's what gave it the catalyst to actually start pushing lower. So liquidity is very, very simple, guys. You need to understand it's just stop losses in the market and pending orders in the market. Okay, so there's no need to confuse it or make it fancy. It's just about making sure that you know what is resting above and below these areas for future reference, for areas that you're then going to potentially use. So here we would have had another range here. We would have had the highs of the range here. We pierced the highs of the range first, and then we targeted the lows of the range to then manipulate excuse me, to just manipulate the market. That's exactly what's happening here. And then once that manipulations happen, where people that are support and resistance traders, those are the main ones it's targeting, you know, they're kind of getting fooled or confused into thinking, okay, the market is broken past the resistance, we're going to retest it, it slams back down. Okay, so then it slams through the support. Okay, cool, we've broken through the support, we're now going to continue lower. That type of mentality is what traps people in the markets, because I'm not saying it doesn't work, right? I'm just saying you got to think about what is resting below and above these levels. If you don't know what is resting below and above those levels, you don't know why you're getting the reactions you're getting. It's targeting liquidity constantly. So the higher the time frame you notice this on, the more you start to realize what is occurring. Okay, so as we can see here again, before we got the move down the other day, I was looking at these areas to understand, okay, we've had daily liquidity captured, right? And then as you can see yesterday, we slammed down pretty heavily. So in terms of liquidity that's been captured today, we've had these lows captured. We also now have some equal lows right here captured. Okay, so think about those that would have been buying from this area previously, potentially buying from this area now. Okay, that think it's a supported level. There's going to be liquidity building in this area. So it's very, very important you understand that, so that you don't get caught up in the traps that it may be presenting. So right now, with what price is doing, it could be enticing you to take a position from this quote unquote supported level. Okay, so I want you guys to understand that. But the main thing to understand about liquidity, to simplify it, is to really, really understand that when you look at the daily lows, right, really, really look at daily lows. If you see them captured, you want to then go and study within this daily candle what has gone on a smaller time frame. So, you know, your 1 hour time frame, your 15-minute time frame, 5-minute time frame. Go and study what's happening in this day, right? Because the next day it gets on this spike and it rockets up. So those are the moves that you're able to be a part of if you know what is occurring. So especially when you have ranges, I don't really trade ranges. I don't teach my students and my clients to trade ranges either. And the main reason being is that you're adding liquidity to those levels, okay? And it's just an easy money grab for the big players that need liquidity in order to actually move in the direction that they want to move the market in, okay? So it's really, really simple, guys. I hope you guys grasp that. I've done my best to kind of simplify it and use terminology in the simplest way so that you really understand it. But the daily time frame is one of the most powerful time frames to analyze on, especially if you're a day trader like me. Just, you know, every day check the daily time frame, check your levels, obviously use your intraday time frames as well. But in terms of just stemming liquidity from these time frames, you can see a lot of reactions off of what I've just shown you, with price going above and below those daily highs and lows. Okay, so I wanted to kind of simplify it and bring you a video today that is a little bit different from, you know, psychology based. You know, I'm definitely a big advocate of drilling in psychology, but at the same time you need to really have some type of edge or some type of skills to see what you need to see in the market. Now, there's a lot more to it than just liquidity. That's just one element and one component of my strategy, but it is a very, very important metric to really understand. Okay, so I don't want to confuse you guys. I don't want to babble on too long. Hopefully this is a simple video to make you guys understand liquidity a little bit better, especially when doing your analysis. Okay, not every high and low is important, but there's still a significance, especially when you're analyzing, hopefully on the bigger time frames like I do, right? So drop a like, subscribe to the channel if you found this video useful. I'm going to be bringing you guys more content as well from a technical analysis perspective. I'm going to start mixing and matching. Let me know what content you guys want as well. If you've got any things that you guys are kind of struggling with, or things that you're not quite grasping in regards to just being a price action trader and things and stuff. Okay? And one more thing, guys, I've just started my free community, which is open to everybody. Okay, so if you want access to it, the link is going to be in the description. It's exclusive for everybody. I'm going to be dropping content day to day, week to week, in regards to technical analysis, psychology, everything that you need. There's going to be free modules in there and training videos in there as well. So if you want to join it, it is a membership, but it's for free membership. Just sign up with the link below and I'll see you guys in there. Okay, remember, it's a free community. Everyone is friendly. Don't feel like there's a silly question. Ask whatever you need to ask in order to gain clarity. Okay, closed mouths don't get fed. I'll see you guys in there. Thank you for watching the latest episode. If you like that, please like and subscribe to my YouTube channel for more content. I'll see you on the next video.